We have an imbalance there. So I'm trying to operate inside of that range for a short. Now, I know because of the volatility, it can color outside the lines, and it's okay. The bodies of the candles are kind of supporting the idea of what I'm looking for, but the wicks I could care less about because I want to get in when it's ideal. So we're going to drop down into a 4-minute chart. Here is that imbalance and fair value gap on the 5-minute chart, but now it's a little skewed because it takes up 2 candles to show that range. The market trades up, and right in that candle, that one right there, that's where I'm going short. I got in at 1033. Dropping down into a 3-minute chart. Okay, the market trades up, works inside that imbalance, and right there, 1033, that candle, when it's starting to bump up against the top end of that fair value gap, right there, as it hits that and starts to move away, I'm in there. I'm going short right there. The reason why I'm trusting that and not thinking it's going to go higher is because we have this high here, and then we have this high here. Which high is higher? This one or that one? Obviously this one. Now, this candle's high. Watch what happens. From this high, we have a short-term swing high next to it here, and then we have one here. So this one makes a intermediate-term high. So we have a long-term high, intermediate-term high, because this high is lower than that one. But we have a swing high here and here that are lower, both being lower than this one. Then we have the same context right here. We have a high with a lower high on either side of it. So I have market structure behind me showing that this is, number one, it's a bearish market because my draw and liquidity is down here. It hasn't traded down there yet. Okay, so it's going to act like a big magnet. So all these fluctuations in here, without understanding what I'm showing you, it's going to feel like it's just noise. It's chop. It's not. It's actually telling you exactly what it's going to do. So the swing high here is an intermediate term swing high. So I want to be going short real close to this high because it's likely to break like it does here. So at 1033, when it hits the upper end of that fair value gap, I have at this moment, go back one candle. We have this high, a higher high, and a lower high. So we have a high with a lower high on either side of it. That's a swing high. That is lower than this one. That is lower than that one. So what you're looking at is a price chart with a directional bias. Okay, something that's leading to a draw on liquidity. So it's not just lower low, lower high. No, you got to look at the nesting effect of the highs and lows. By looking at that relationship of the highs, I trusted this because we had a swing high here already in effect. And I know that this candle here is not likely to go above this one because this one didn't go above that one and this one didn't go above that one. Not because it's lower lows and lower highs. There's much more going on underneath the surface than just lower lows and lower highs. But if this is the candle I'm trying to get in at and I execute on with all the understanding I just outlined there, I want to see displacement. We get it here. Now, if I didn't take this trade here, I could trade with the return back to this right here. Why? Why is that possible? We have a swing high. It's broken to the upside. This low is taken out here. This candle's high here. If it touches that again, I can be short there just using the imbalance in the fair value gap entry technique I'm teaching you. I can go there and get short, or I want to get up here as close as I can to that important high that I've already outlined here. So I want to be in that and wait for that initial move. Because then when this occurs, when you're that high up in the session high, so at 8:30 right there, this run up, I'm real close to this high by entering there. Notice that? I'm not waiting for a breakout below that low. So I'm getting up in there where it's an optimal entry. I don't need to get the highest high. You don't need to get the highest high. But you need to understand why it should be trading away from the levels you're trying to enter at. But the displacement comes, which is what I was waiting for, and it gives you a confirmation. When this occurs, it's just almost like, okay, just sit back and just relax and just let it do its thing.